Okay, so good morning, everyone. Welcome to the macro snapshot. We are, just for the record, we are Monday, Easter Monday, April the 21st. Of course, European markets are in the main closed today to observe the Easter Monday. There's probably going to be a little less liquidity in the US as well, and not a huge amount of data. So it could be an interesting day in the sense that ordinarily one would expect a quiet day, but with a couple of headlines from over the weekend and the low liquidity, there could be some decent size moves in this situation. Basically, what I've got up here is just what's happened to the dollar. As I say, recording this on about 7:30 in the morning on the Monday, April 21st. And so what we can see is since the session opened, a lot of US dollar weakness all across the board. You see the really strong performance here, the Swiss franc powering ahead plus 1.5%. The euro as well, money flowing into the euro. Interestingly enough, New Zealand dollar doing quite well, outperforming the Japanese yen. Not sure about that. But basically, what you can see is that most of the risk on currencies are not doing as well as the sort of safe havens. So you're seeing the Swiss franc doing well. You're seeing the Japanese yen doing pretty well. Euro is solid. So the euro is definitely being perceived here as a liquid, relatively solid currency. Some of the more risk-on currencies, as I say, for example, the peso, the dollar, the Canadian dollar, the Korean won, South African rand, not doing as well, and the Aussie dollar. But everything, interesting enough, absolutely everything up against the US dollar. And if we just have a look here and look at the dollar index, which of course is about 58% euro. I'll just bring that up. A very, very weak performance, breaking down. We'll just bring it up here, and we can see that you can see how it's breaking down. So just first of all, from a technical perspective here, if you like things like sort of Fibonacci's, which I do quite like, but you can see here this Fibonacci measured move from basically from here, we're getting towards a very overextended level here, but nonetheless, it is breaking down into clear territory. So at this point, you've got to say that this level down here at about what are we, 97.7, that could be the next stop for a test because that would represent the end of the Fibonacci extension, the measured move. So very, very over sold at this point, and also potentially a little bit of a pause here. In fact, such a pause, just give me a second here. I'm just going to bring up and just put in a little level here because you can see this also goes back to June of 2020. So the point is here that we're getting to quite key technical levels with the US dollar. And if it can't hold here, we could expect a lot more weakness. On the other hand, this could be an interesting moment for a bounce around about 97.75, 97.8. So what's causing this? Obviously, there's the structural concerns about sort of tariffs. There's no particular movement from China. I mean, what's happening is that the White House over the last, just to step back, the White House over the last week or so has been relatively quiet, apart from the occasional Trump tweet saying things like, deals are coming and everything's doing super well. And Treasury Secretary Bessent said that, there should be a deal soon with Japan. But if you actually look at Japan itself and China, the Japanese were fairly circumspect and didn't really, particularly say there was any deal coming quickly. The Chinese have been very, very silent. And what we actually saw over the weekend, there was a meeting, a high-level meeting between the Vietnamese and the Chinese premier, president, Xi Jinping essentially said that countries should think carefully before decoupling with the Chinese and throwing in their hat with the Americans. So kind of a veiled warning from the Chinese to a lot of their trading partners in the Asia Pacific zone there. So the thing is, there's no at least at this point, no quick deals happening, not a huge amount of movement from Europe as well. So my personal view, and just my personal view, is that a lot of the sort of America's main trading partners are adopting a little bit of a wait and see attitude, maybe, not in any hurry to do a quick deal in the next few days. We shall see if something happens this week, but at this point, nothing's much. So therefore, the big emphasis, I think, is really being placed on the kind of the less than professional, the competence of the US administration is being placed in question. And therefore, if the competence of the US administration and the competence of the US government is being placed in question, that's causing a lack of confidence in the US dollar. Now, then you add that to the idea that the US economy may slow down because of the tariffs, and you're getting definitely some flows away from US denominated assets. And that, as you can see here, is being reflected in just very broad dollar weakness. If we actually look at this here, you can see that the dollar index has sold off now about 11%, which is, very substantial, all things considered, since, basically Trump came into power. Now, is this unexpected? I mean, if you actually go back here on a weekly chart, if we actually go back to Trump's first term, if I can go back that far, remember Trump was in power from 2016 to 2020. You can see here that when Trump was in power, the dollar actually, if you go to, let's say, end of 17, this kind of area here, you see that the dollar actually, during parts of Trump administration, was trading down to about 90 cents, 89, 90 cents. So, to answer the question, can the dollar further fall another, 6, 7, 8 cents? The answer is absolutely. Has it happened on Trump's watch? Absolutely. Do we know that Trump, in theory, wants or is not adverse to having a weaker dollar to make trade exports from the US more attractive? Absolutely. So the point is here, if we get through this level, which, as I say, is pretty key, about 97, this level here, which I just mentioned, about 97.8 or so, 98, we could definitely have a bit more downside. The other thing which I think is causing a little bit of consternation this morning in terms of confidence, but also technically, is the chatter about firing Fed President Jerome Powell. Excuse me, I should say Fed Chairperson Jerome Powell. This seems to be being taken quite seriously by the White House. It seems that Trump absolutely has discussed this. Trump is very unhappy that Powell is not cutting interest rates more like the Europeans. And of course, I'm not going to get into the debates. There's some debate as to whether that is legally possible, but certainly it seems that is a serious subject of consideration within the White House. And that also is causing a lack of confidence in the US system in a sort of a much bigger sense, because one of the pillars of American exceptionalism is the idea that the Federal Reserve is completely independent and actually, in theory, will keep monetary policy in a place which, in theory, will be, politically sort of independent. Now, if that's going to be threatened, that's going to be yet another factor to undermine confidence in American competence. Let's put it that way. So that's definitely causing a bit of a sell-off as well in the US dollar. What's also very interesting is that the general theory is that if Powell were to be fired, and we could talk about that in another video, just the mechanics of that and the possibilities of that. But let's, if Powell were to be fired, that could cause a fairly nasty sort of steepening of the curve. And we're seeing that here, if we look at something like the 2s, 20s, which I'm going to bring up here. So we have the, let's say, I don't know, the 2s, 30s. Sorry, did I say 220s? That's on a weekly chart, but let's just put it on an hourly chart here. So you can see that just on this hourly chart, they've had some pretty aggressive steepening. And if you put it back then to a daily, you can see that the 2s, 30s is starting to steepen quite a lot. If you look at the 2s, 10s also sort of steepening. So one of the reasons there is that there's a sense that if Powell were to go, Trump would replace Powell with somebody who was much more dovish, somebody who would be much more amenable to cutting sort of front-end interest rates, the Fed funds rate. Now, if that happens, we're going to have the Fed funds rate sort of going down, but that would imply a Fed chair who is less active in combating inflation. So the idea here is that, yes, you could cut the Fed funds rate, and maybe that's going to stimulate the economy, but that's certainly not going to be combating inflation, which seems to be remaining sticky. And the idea there was that inflation will be allowed to sort of run away a little bit out of control, and that's considered a bit painful by the long end of the curve. And so what we've seen here is pretty incredible. If we just look at, as I say, I'm going to put this on an hourly chart here, and we can see just the comparison between the different parts of the yield curve. So if we go to the ZT, the front end of the curve, so the 2-year, you can see in the US that the 2-year has come off a bit here, but you look at the 5-year a lot more. You see the 10-year a lot more, and you see the ZB. So you see the ZB and then the ultra bond, so the extreme long end of the curve. So look at this, for example, the ultra bond basically has just been sort of falling, whereas the front end of the curve, was up overnight and has come off in the last hour or two. So that's causing a pretty aggressive sort of steepener here, bear steepener in a sense. And basically, that's because the market's worried that, if Powell goes, there'll be less attention paid to the combat against inflation. And again, as I said, the bigger issue here about the competence of the US administration and the trustworthiness of US denominated assets, which seems to be slowly being brought into question. Now, if we actually look at that again, of course, we can see that the US well, first of all, we can see that the volatility has gone up. And so you see here that vol has actually gone up a little bit overnight. And what's kind of interesting, if you just look at this also from a slightly bigger picture, this is the daily index on the VIX here. And you can see here that, essentially last week that actually came down a little bit. But then if we go across to the ES, you can see that also the stocks were down overall last week. So we have a situation where the VIX fell a little bit last week, but the stock market in the US fell itself a little bit last week in the US. So we're not getting that correlation of falling VIX pushing up the stock indices, which is quite unusual. And again, that would indicate to me potentially that there is some kind of sort of lack of confidence in the US equities here. Now, what we've seen again in the futures, since the futures opened last night at 6 p.m., we're seeing that the ES here, the ES minis are down, not a huge amount. I think it's about 1.22% or so about 70 points. But nonetheless, that is starting to look weak. And this is a chart where the measured move, the Fibonacci extension had been finished. So if you look here at the Fibonacci move, it was pretty overextended. But then if you look at kind of the bounce, we did get a pretty aggressive bounce. But as you guys can see here, if we take this shorter term impulse, it basically failed at this horizontal resistance at about 5,500, which is also coinciding more or less with a 61.8 fib retrace. So the point is here is that we haven't had much we had a nice little bounce, but it failed at key technical levels. So where it could go now, obviously, a potential retest lower is potential if we get no positive news on trade, if the rumors around Powell continue to swirl. Can the ES sort of keep on falling? For sure. There's got another level down here at 5,100, then another level down here at about 5,000 or so. What I like to do in these kind of situations, put it on a 4-hour chart, just break it down a little bit, and I like to ask myself, what would the bulls have to do? So we got the initial bounce when we had the 90-day reprieve. So you see this, we had this initial bounce, it couldn't retest, so that's kind of positive. But again, the question really here is this got further downside? And I'd say at a minimum, what the bulls need to do here, and this is a 4-hour chart, I'm going to put it here on a fib. I think really that this could fall without massive technical damage on the short term, down to about this level here, about 51.20, although we do have a local low at 51.50. So I'd say this little box here between 51.50 and 51.20, this is going to be key, because if the bulls want to sort of push back a little bit on this sell-off, the bulls really need to come in here. If the bulls cannot sort of pick up the baton, so to speak, and push this higher around about this 51 25, 51.30, 51.40, this level around here, and we go below that fib, I think we're definitely looking at another retest down towards, basically breaking 5,000 down to 4,900. And at that point, you're looking at a sort of a triple bottom, which might want to break a little bit lower. Now, we're not there yet. And as I say, this is Easter Monday. Europe's closed, probably lower volumes than usual in the US markets. But it's just on also these low liquidity markets that you can get sometimes a sharp moves. So that's definitely one to be looking out for. A similar thing on the NASDAQ, of course. I won't dwell on that too much, but basically the same kind of price action there. Just talking about some of the stocks, we're also seeing the smaller caps here, the Russell also weak, and if we look at the equal weight, you see that also is weak. And the Mag 7 very weak as well. So basically, this is fairly broad-based weakness, not really idiosyncratic. What is interesting is to look at over in Germany, which is actually not open yet. So that's the thing. We don't really have a read here on the DAX or on the Euro Stoxx futures. But I would assume that would fall probably in sympathy with the US, but we'll have to wait until the open happens. One thing which is interesting as well, guys, just looking at you look at this sort of oil, see oil inside day here, not particularly doing very well. And again, just worried about sort of global growth at this point, despite the very, very weak US dollar. So we have a very, very weak US dollar and oil cannot rally. And that's in difference to some of the other thing. So if we look at a Bitcoin, that's actually breaking out, which is kind of interesting. We look at copper having a very strong break upwards. It's going to be a key point around about 48.80 or so. You see this fib retracement level here. That's going to be a very, very interesting level there. That could be an interesting level to short. I don't really see any specific reason or headline for copper to be so high. Could be weak US dollar weakness, could be some sense that the Chinese maybe want to stimulate their economy, but we're not really getting anything too obvious about that. Or it could just be that in uncertain times with inflation, hard assets and commodities do actually historically do relatively well. We're also seeing silver popping up, no surprise there. And of course, our dear old friend gold. Just ripping higher and higher and higher. Now, is gold, incredibly overbought? Yes. It's tempting. I've got to say, it's kind of tempting to maybe, sell call spreads or something like that. Just on a sort of a technical retracement here. But, as long as we have risk off and, sort of comments that potentially Powell will be fired, I guess gold, it's a risky short, but certainly from a technical perspective, very, very oversold. One thing I do want to talk about as well is just look at some of the other currencies. And again, we looked at something which is sort of interesting is the euro index. We often talk about the dollar index, but let's just look at the euro index. And so if we actually look at that, it's above 112. And if you just go back a little bit in time here, so let's put this on, let's say a weekly chart, get a bit of perspective here. You can see that once we go over the 112, it does tend to sort of pop a bit higher. So you can see back here in 2017. So once we get to these levels here, you can see that it definitely can go a bit higher. We do have quite probably the next resistance. I'm just going to put this on here. Is about 115. So this is the euro index, not the euro USD, the euro index. But as you can see here, it's got a little bit more upside, probably another 2 or 3% at a minimum. And that would imply to me that, something like the euro, if we go into the euro USD now, possibly has a little bit more upside as well, maybe up to 116, 117, something like that, because it looks like the dollar is in free fall at the moment. Again, looking at the yen, again, on a weekly chart here, breaking down to a very, very key level, 140.2 or 140, let's just call it 140 here. As you guys can see here, we had a little rally, but breaking down. Again, it's from a technical perspective, we can look at like a Fibonacci extension here. I think what could be quite interesting, it wouldn't surprise me if we just finish off this move and get down to the 140, maybe break some stops down to 139, something like that. That could be an interesting buy at that point there. It's a pretty good risk reward, although you'd want to be doing that with a tight stop loss. But definitely the yen looking strong. And we know that would actually suit the Americans to have a slightly stronger yen. That would also be a relatively easy fix for the Japanese if they allowed the yen to strengthen a little bit, because that would, make their exports a little less competitive, which presumably would keep the Americans happy. Just finally, guys, what I want to look at here as well is just the Chinese renminbi, because there's some sense that, the Chinese are letting their currency sort of weaken just to offset the effect of tariffs. Now, if we look at the US dollar versus the Chinese yuan, we can see that actually that hasn't been the case. The US dollar did strengthen a little bit, but you can actually see that the Chinese yuan is actually strengthening a little bit against the US dollar, not massively, and it's relatively stable. But where it does get quite interesting is actually if you look at some of the other currencies against the Chinese offshore. So let's say we go on the euro CNH. And then you can see here, you can see how strong that's been. So look at the euro strengthening here. So my point here is that if we look, let's say since the 3rd of March, we can see that the euro has strengthened 11%. That's basically in about 6 weeks against the renminbi. So what I think is happening here, because I was looking at something over the weekend, like the basket of the Chinese renminbi, so on a trade weighted balance basis, you can see that the Chinese, it's almost as though the Chinese is saying, okay, we can't really sort of fight the Americans too much. What we can do with the remember that China has full industrial production capacity and its warehouses are full of inventory. It needs to get rid of this stuff somewhere. And could it be that the Chinese have decided decided to keep their currency relatively stable, fraction, against the US dollar, but allow it to weaken against, for example, the euro. As you can see here, it's weakened over 11%. If we look at it against, I don't know if we have that, but I'm just thinking, let's say, for example, the Swiss franc. Um, yeah, it looks as though we have the offshore. Yeah, same thing you can see against the Swiss franc here has strengthened in the similar time frame about 13%. So against Switzerland, it's strengthened a lot. What else we could look at? Let's say, for example, Australia. I'm just kind of curious. The AUD again, not sure if we have that. Yeah, we seem to have that. So well, there was a crazy sort of one day when it went down the 4th of April, but basically not as much against there. So it really looks as though against Europe, and again, as I say, 11 or 12% against its European trading partners. Whereas if we look at against the US from, I think it was March the 3rd, we had that. So from about here, you can see since March the 3rd, essentially unchanged. So could it be that the Chinese are actually allowing their currency to weaken substantially against a lot of their other trading partners with an idea of flooding those markets with cheap Chinese goods and just to sort of keep the Americans balanced? Okay, guys, so that's about it. I'll leave it there just for the time being. One thing I would note, though, I'm just looking at my notes here, is something like the tip over the TLT, and let's just try and bring that up. And that, of course, is the real yields. Just look at some of these ratios here, if I've got it. So yeah, just looking at the tip here, kind of interesting. You can see the tip is underperforming so the inflation adjusted treasury is underperforming gold, but also if you look at tip over, let's say TLT, which of course is the long-term treasury. Whoops. There we go. You can see here that TIP is also outperforming the TLT. So what that tells you is that the market is still a little bit concerned about inflation. So it's kind of interesting. You see up a little bit in the pre-market. So the point I'm trying to say here is that in terms of nominal yields and inflation protected, you can see that the inflation protected ones are still outperforming the nominal yields, which basically is indicating that the market is still a little concerned about the stickiness of inflation. And keep in mind that if Powell were to be replaced, as I said earlier, by a more dovish chair of the Fed, the market would not like that at all and would assume that inflation fighting is no longer the main concern of the Fed, and we will continue to get a pretty vicious steepener. Okay, guys, I think I'm going to leave it there. Not a huge amount of data today. What we will have is a little bit of sort of survey data from Europe. We have the flash PMIs on Wednesday, as well as in the US, we have the S&P Global flash PMIs. So a little bit more sort of sentiment data. Initial jobless claims, of course, interesting on Thursday, just to see if finally some kind of weakness in the US job market will be coming in. And then personally, what I'm going to be looking out for is just whether, there's signs from the Swiss National Bank. We have the head of the Swiss National Bank, Schlegel, who's speaking on Friday, so still 5 or 6 days away. And we can see like this incredible strength in the Swiss franc. Just curious to know whether that's becoming of concern. I think it might be a little bit of a concern for the Swiss National Bank, and whether they are going to start intervening to actually try and start weakening that if possible. And we'll also get a bit of a clue about that from the Swiss National Bank sight deposits, which are going to be released tomorrow. That'll give you a little bit of insight into what the Swiss have been doing in terms of currency intervention. Okay, so that's about it today, guys. Let's see if there's going to be some tweets from our friend in the White House and any sort of trade deals. Rest in peace, Pope Francis. He seems to have been a kind human being, which is what we need in this world. Okay, I'll leave it there, guys. Have a great Easter Monday, and we'll continue the conversation. Thank you.